Lisa Gavin. She is the Vice President of We Build Your Credit. Today, we're going to be talking about moving forward post-COVID-19 credit. What do we do now that we're coming out of this crisis we've been going through for the last over a year of the COVID-19 pandemic? Welcome, Lisa. How are you?
I am doing great. Thank you for having me today.
Great. So what is this? What should we really be looking towards trying to address this issue? Because many people, some people lost their jobs. Some people actually were unable to keep up with payments, even if they didn't lose their jobs. And some people were actually in dire economic straits prior to even COVID-19 happening. So what do people need to know now?
Well, I have the philosophy of turning lemons into lemonade, right? And so in very challenging times, it presses us to be the best that we can be, to not allow the times to get you down, and to do the best you can, to do what you can with what you have, right? Mm-hmm. And so when it comes to credit, that looks let's just say people don't know how that looks. What I was just saying when it comes to credit. So what can you do to keep things going? So I'll give you a couple of things that I tell my clients on a regular basis. There are some tools out there that are low-cost tools that people can use to continue to build and develop, right? Okay. Even though their credit may have been challenged, the most important concept is to understand that you have to get on the horse and keep riding. That's number one. And let me explain what I mean by that. Things fall off, and as you said, late payments, things like that happen. But you cannot allow that to force you in a position that you just say, forget it, I'm not going to do anything with my credit. Because credit is measured by your ability to manage credit. So if you stop managing credit, then what will that do? It keeps your scores low, and you never get on the course to getting your credit back on track and rebuilding. Does that make sense?
That makes perfect sense.
Now, of course, the next question is going to be how, right? But I'll let you ask me a question in between before I get to how, if you need to.
Great. Yeah, that's I like that analogy. Sometimes if you're riding a horse and you feel tired, you may feel like, I'm just going to drop off this saddle. But the horse is going to keep going, and you're going to be left in the mud, right? So I'm glad that you put it in those terms. So, so how does someone keep in the saddle? How does someone keep, their boots on and the lights on and the gas on, right? Because that's what it comes back down to, too. So
now let's understand.
Yes.
I'm not saying I can't speak to, the job situation. Obviously, people have to get employed and be gainfully employed and to find a way to survive on a day-to-day basis. So moving just a little bit past that, because we can't fix all challenges.
Okay.
However, if you're back on track, meaning that either you're getting consistent unemployment, you are, starting back working, you're doing a lot of hustle work, which unfortunately is pretty prevalent in today's society, whether that's Uber driving or whatever. But the bottom line is whatever you're doing to get consistent income, one thing that you can do is to carve out money for savings every month, right? Small savings. I'm not talking about big savings, right? So the savings that you can do that impacts your credit is like a self-lending program that they have. Selflender.com is the site that comes to mind, for instance. So you could do a program that for as little as maybe $48 a month, you're actually saving $48 a month. But in that savings program, it's reporting to the bureaus that you're essentially saving that money. Oh. They do that by framing it as a CD. Mm-hmm. And so if you can carve out for yourself $48 a month. Now, those of you all who go out to eat, those who go and buy things, those who do other stuff, maybe one of those things have to be cut back to have the $48 a month to do that. But you can save that money and start building your credit at the same time.
Yeah. Yeah, and what you're saying makes total sense. So they actually report this back to the credit bureau. So it sort of is a testament to your credit worthiness, I guess.
Yes, and at the end of that, you get that money back. So you're essentially getting credit reporting for saving money.
Wow, that's
one of the things that we hadn't probably thought about a lot prior to COVID in times like these, where it's more challenging to build credit, but yet these other ways are evolving that people are becoming more and more aware of to start getting credit at the same time for a very low cost. Wow. I have another good one for you, too, if you're ready for it.
Ready for it. Go ahead.
A lot of people ask me about Experian Boost, right? Oh, okay. Experian Boost is simply a program that is offered by Experian, one of the 3 credit bureaus, that allows you to get credit reporting for the things you're paying already. So if you're paying Netflix, if you're paying a cell phone bill, you can put those things into Experian Boost and start getting credit reporting. However, only with Experian, but still, you're getting credit reporting for the things that you're already paying. So that's another pretty neat way that you can start boosting your credit for a small amount.
Wow. Does that include things like your mortgage payments or other things that?
That's pretty much, restricted to things that wouldn't traditionally report. So that would be, like streaming services, cell phone bills, utility bills, because those things do not report on a monthly basis. But through that program, they find ways to help people build reporting.
Oh, great. That clears it up. Yeah, that makes a lot of sense. And, one of the things you said that sort of hit me and thinking about it as you were speaking is, many people don't think about saving because they don't see themselves ever catching up or being able to retire. And I know some people personally who, are at the retirement age now and don't have the savings, and they're trying to figure out how they're going to make ends meet just on a daily basis. And, but if you saw yourself in the future, maybe it's an exercise seeing yourself in the future and saying, maybe it makes sense to save now so I don't have that extra carrot on my plate, or I don't have that, extra slice of cake, right?
Right.
And that could actually improve my financial outcome in the future, even though I'm not there yet.
Right.
Yeah.
And it's not going to be a big enough dip, to take care of retirement, so to speak. But it's kind of killing 2 birds with 1 stone. Getting into the habit and the mindset of some type of saving, right? But at the same time, getting the credit reporting to start rebuilding yourself. Because as you rebuild your credit and build your credit up higher, and, hopefully at some point get the scores you need, everything becomes cheaper, which is another mechanism for saving money because you're not financing things at high interest rates. And the things that you're doing are at lower interest rates. And so that creates more saving as well.
And that hits at another point, that this gives you peace of mind too, right? Because the stress and all those things that can impact your health overall are sometimes, and to a large degree, I'd say, tied to your fiscal situation and your finances and how you're actually managing your money, because that can have a deep impact on how you feel every day.
Yeah. Those things are definitely tied together.
Yes. Yeah. So I mean, so we really went through selflender.com and Experian Booth. Is there anything else out there that people should be aware of, or any kind of tools that should be looking for?
Sure. This is something that does require a little bit more money up front. By the way, Self-Lender, for instance, just requires you to make that first installment. Okay. And actually, I think they have something a little bit lower cost, perhaps $24 a month or so, but it'd be stretched out for 2 years. So, so you can do it at whatever level you're prepared to get into it at. But one of the other things for people who need to rebuild and don't know how to get back started is to do a secured credit card, meaning that you would have to come up with a minimum of $200, and they put that money into a savings account. And so that gets set aside to make sure that you're going to be a good boy or girl when they issue you a credit card in the same amount. What that does, though, is it keeps you from all of these horrible credit cards where you pay these ridiculous fees just to get the credit card. And you start out literally upside down the minute that you get the credit card. A secured card enables you to not go into that situation, but yet be able to get approved even when you have challenged credit. So that's the other thing that I would recommend is a secured credit card.
Okay, good. Yeah. And so you put your money in the bank and then they put it into a savings account. So it sort of allows you to get things on the card, but it's sort of backed by the money you have in the bank. That's the kind of...
Exactly.
Okay.
That's why they call it secured. Anything secured means it's backed by something. So they're backing that credit card by the money they're holding of yours in that savings account. But when you're done, you get that money back. So again, it's not a situation where you're paying that money out in ridiculous fees. They're holding the money to make sure that you're going to manage it well.
Mm-hmm. Well, any special considerations, because we were mentioning earlier COVID-19, and there's all kinds of things out there now where they have economic programs, from the government, where you can get, money, through checks and that kind of thing. They're sending out checks, and I'm not sure of how that fits into everything. Is there anything people should be aware of? Yeah.
Well, it fits in from the standpoint that as the government right now is trying to give something back to the people versus all the corporations, because the corporations have been getting their money for a long time. So now that the government is giving a little something to the people, I would recommend that people target that money to isolate different things that they need to handle or manage, if they can. Now, some of that obviously has to be day-to-day living. But even if you're able, like I've had a client, for instance, she turned the COVID indefinitely into lemonade. She started negotiating with her current creditors and said, hey, look, my income is down. I can't do this. Can I settle out this obligation with you? I know I owe you $2,000. Can I pay you $1,000? If you're a good negotiator and you had a gift of gab like I do, and like she does, she got lenders who she owed a lot of money to reduce that down and was able to close out those accounts and reduced her overall debt.
Wow.
So, that's something that you can hopefully try to take advantage of during COVID, because lenders now are more conscious that people are having challenges. And maybe I should get something from you than to get nothing from you. So that's another way to think of kind of these COVID times, is how can you negotiate yourself into a better situation, given that you have a built-in excuse for having challenges, right?
Right. And what do you have to say to the veterans? Many of the veterans have, things with, disability claims, or, they get the regular retirement checks and those kinds of things. So is there anything in that realm that they should be paying attention to?
Well, I would just say in general, everything that I'm talking about is especially prevalent for folks in that arena, simply because, yes, in some ways they can rely on, special lending practices because you're a veteran, but you cannot rely on that in all arenas. So it may get easier for them to kind of forget that they have to build credit, but these simple ways that we've talked about earlier are great ways for them to very simply, low cost, keep themselves in the circle of building credit. So then when it comes to a time that they need it, they're in position.
Okay. And, what do you recommend for the younger people out there? We know we have people from different generations right now that you're speaking to that are, just starting to establish their credit line. You have other people who are, let's say in the middle category, going from the 20s to 30s and 40s, where they actually are in a situation where they have burdened by student debt. When people told me the student debt that they have right now, I never would have gone to school. I mean, I look at these numbers and I go like, you got to be kidding me. And
a lot of people are regretting some of those decisions. So unfortunately.
Yeah. And then, then we have the people who are, a little bit older, who are in the, 50s, 60s, getting ready to retire, and those who are already retired. So is there something that you would do differently depending on what age range you're in?
The biggest thing that I would say is that your credit is an investment, right? And so if you exhibit some controls and you don't overdo it, meaning getting into too much debt, right? If you can exhibit controls early, the main thing is that you want to maintain credit that is not costing you a lot of money. So, for instance, if you have a credit card, whether you have to get it through a secure card or whatever it means, Number one, you make sure it's paid on time. Whatever the minimum payment is, you should be able to afford $25 for a minimum payment. Keep it paid on time because that keeps you in position. So that's number one. Mm-hmm. Number two is that you want to make sure that you, even if you're in a position that you, let's just say your income is low, if you paid that credit card off and left it at zero balance, it is not, there's no debt associated with it. But the fact that you have it is still building credit for you. That's a concept that a lot of people really struggle with. Mm-hmm. Zero it out, hold on to it. It's still building credit for you. But don't overspend because you don't have the money to get into a lot of debt.
Right.
So it's understanding in advance, right, how to manage your credit to reflect your current situation.
Yeah, it sounds like a double-edged sword. So you want to have credit, but you want to have good credit. You don't want it to
yes.
Go to the point where you can't keep up with those payments. Like you were saying, riding the horse, you want to stay on the horse.
Yes, because otherwise you're not going to get to your destination. If you just fall off,
right.
You're not going to make it to your destination. So you have to manage your credit accordingly. And so that requires control. You can't let the credit card control you. You control the credit card.
Perfect. Yeah. So we have about 2 more minutes to go.
Sure.
But maybe you can give us like an overall, this is what you need to know. I really love the analogy with staying on your horse. But yeah. So what do you what kind of messages you want to leave people with about why having the credit is so important? Because we have too much intergenerational wealth, being lost, and we have people who are dying too early because of medical reasons and that kind of thing. We're looking at COVID, and they lose their pensions, they lose their Social Security they've been paying into for their whole life, especially in minority communities, communities of color. So what would you tell people? What is their what they should they be thinking about and how this affects them?
Now is the time to start building or to keep building. When you go through difficult times, that's the time to buckle down and figure out how you can preserve what you have, but don't give up, because credit is a wealth building tool. It's a wealth building principle. Rich people get rich on other people's money, not theirs. Right. So you have to be in position to be able to utilize, borrow, pay back, of course, other people's money to invest in the things that you want to invest in your future. Take credit that seriously. So even though we're in times of COVID and dealing with some of those things, if COVID is in town, get on that horse so you can get out of town.
Okay.
Stay on that
get out
horse.
the way.
Yes, you can get out the way, but you got to be able to keep riding. So that's a very important principle. Yes.
Well, do you have a website people can go to or a telephone number people can go to
sure.
learn more about
my
WeBuild?
best site to go to, I have 2 companies, WeBuild Your Credit and Next Level Credit. But Next Level Credit is really formatted for the education. So that's where I would first send people. So that is nextlevelcredit.com.
Okay.
So you go to nextlevelcredit.com. You can also still send an email. I'll get it, and you'll be able to reach me. We also have a YouTube channel, Next Level Credit and Funding, on YouTube, where we also put out educational videos to help people understand how this game is played.
Okay. Excellent. So
telephone number.
Yes.
312-971-1358.
Okay, say that again.
312-971-13. Did I say 5898? 1398.
98. Perfect. Okay, nextlevelcredit.com. Next Level Credit and Funding.com. And
that's the YouTube channel.
971-1398. Stay on your horse. But thank you so much, Gavin, for bringing us this, the Vice President of WeBuild Your Credit.